Understanding contingencies. Ever heard the word contingency and felt like you just stepped into a legal thriller instead of a real estate conversation? Don't worry, you are not alone. Today, I am breaking down what contingencies really mean, why they matter, and how they protect you whether you are buying or selling a home. By the end of this video, you'll feel way more confident navigating the steps of a real estate offer without the stress. Let's get into it. What contingencies actually are. Think of contingencies as safety nets written into your contract. They give buyers time to make sure the home is right for them, and they give sellers a clear framework for what to expect during escrow. In simple terms, a contingency says this sale moves forward if blank happens. If it doesn't, you can actually walk away without losing your deposit. Most people hear the word and immediately feel overwhelmed, but once you understand each one, the whole process becomes way less intimidating. The big three contingencies. Let's go deeper into the three contingencies you are almost guaranteed to see. And I'll give you real examples of how each one plays out, so this feels less like legal paperwork and more like real life. 1. Inspection contingency. The inspection contingency gives the buyer time to bring in a licensed home inspector and get a full picture of the home's condition. What this actually looks like. An inspector checks the roof, plumbing, electrical, HVAC, foundation, attic, crawl space, everything the average buyer can't see. If something comes up, the buyer has options. Asks for repairs, request a credit, renegotiate the price, or walk away with their deposit protected. Real example. Let's say the inspector discovers a slow leak behind the kitchen sink that caused mold behind the cabinet, something you'd never noticed during a showing. The buyer might ask the seller to fix it before closing, or request a credit so they can handle it themselves. If the issue is major, like a foundation crack, the buyer may decide the house isn't a good fit and cancel safely. 2. Appraisal contingency. The appraisal contingency protects the buyer when the lender sends an appraiser to determine the home's fair market value. The bank won't lend more than the home is worth. So, even if both parties agree to a price, the appraiser gets the final say. What this looks like? If the home appraises at or above the purchase price, smooth sailing. If it appraises below the purchase price, time to renegotiate. Real example. Imagine you offer $700,000, but the appraisal comes back at $675,000. Now, there is a $25,000 gap. Here's what can happen. The seller lowers the price, both parties meet in the middle, the buyer brings in extra cash, or the buyer can walk away without losing their deposit. This contingency protects buyers from overpaying in emotional or competitive markets. 3. Loan or financing contingency. Even if a buyer is pre-approved, the loan still has to officially clear underwriting. This contingency allows time for the lender to verify income, documents, credit, employment, and the appraisal, and make sure everything meets loan guidelines. What this looks like? The lender might request extra documents, asks for explanations, or update credit reports. Most buyers don't realize that a pre-approval is just the first step. This is where the real vetting happens. Real example. Let's say a buyer gets pre-approved in January, but during escrow, the lender finds an old debt that just hit their credit report. Or the buyer gets a new job offer. Or the bank requests one more document to finalize the loan. If the loan can't be approved and the financing contingency is still active, the buyer can back out with the deposit safe. Without this contingency, they'll be risking tens of thousands of dollars. Why contingencies matter to buyers? Contingencies are your protection plan. They keep you from buying a home with hidden issues, overpaying, or ending up stuck when something outside your control goes sideways. Without contingencies, you'll be committing to one of the biggest purchases of your life with no opportunity to double-check anything. Nobody wants that. Why contingencies matter to sellers? Sellers sometimes see contingencies as obstacles, but they actually create clarity in the escrow process. They set expectations for timelines, allow buyers to move comfortably, and significantly reduce surprises. A strong, well-structured offer with fair contingencies is usually more solid than a risky, rushed offer with none, when contingencies can be shortened or removed. In competitive markets, buyers sometimes shorten contingency timelines or remove certain contingencies to make the offer strong. But it should always be done with intention, not pressure. Removing contingencies can make your offer stand out, but it can also increase your risk if you don't fully understand what you are giving up. If you're considering shortening or removing contingencies, reach out before you do it. I'll help you make sure the move is smart, not emotional. Contingencies aren't scary. They are simply tools that protect everyone and keep the transaction running smoothly. When you understand them, you can make smarter decisions, negotiate with confidence, and avoid costly surprises. If you have questions about your specific situation, whether you are buying or selling, send me a message anytime. Always happy to help you move with clarity. And don't forget to like, subscribe, and check out the other videos on the channel for more simple real estate tips.